Holy smokers, folks, this ain't no dang jokers, okay? I'm a little late getting today's video out, and the reason is I was at the dentist. Hadn't been to the dentist since probably prior to Rona, and I got absolutely brutalized at the dentist, okay? For an hour and a half straight, had my mouth open. You ever had your mouth open for an hour and a half straight, just getting brutalized? Wait a minute. You know what? Some of you guys, I don't know, okay? But we got a lot to talk about in today's video, okay? And you know what? I don't even want to start it with Nike. We'll come back to Nike. We'll talk about that whole situation. And, you know, a lot to get into in this video. Hope you guys enjoyed as always. I actually want to start it here, okay? I feel like a kid in a candy store right now. Here's the deal, okay? Everything at this point of this crash in this final stage is getting unbelievably discounted. You're getting even the most quality names of the stock market now at this point at multi-year lows. You're seeing stocks lose 3 years of gains, 5 years of gains, 7 years of gains at this point. Even some of the best companies in the world, even some of the most respected companies in the world. At the start of this year, the only place you could find interesting values was in a lot of the small cap stocks, or more speculative, right? Because those ones are the ones that they sold off first. But as the years ticked on, and especially recently, everything's opened up now. And everything is like, oh my gosh, man. And it makes it a little hard as a stock market investor because you're seeing deals all over the place. It's like this stock just dropped another 10%. This stock just dropped another 20%. This stock's down to a new 52-week low. This stock's now the lowest it's been in 5 years. And even for the most quality names in the stock market, this is what has played out now at this point in time. So I feel like a kid in the candy store. This is, you know, the last time I felt like this was December of 2018. But this is like December 2018 on steroids. Okay, let's just call it what it is. It's on steroids. Okay, this is a whole other level we got going on here. This is the nastiest crash we've really seen in the stock market, in my opinion, since the great financial crisis. We haven't seen something like this since the great financial crisis in terms of stocks getting absolutely obliterated month after month after month after month, and it's just like, where's the end in sight? We haven't seen this since 08, 09, to be quite frank, and that's what we're going through. That's the market that we're in, and we got a lot to talk about in regards to this here today, folks, okay? So, right here, Apple stock, right? Apple stock we're losing it, man. We're losing it, and no bueno. This stock just in the past few trading days has lost 10.5%. Now at this point in time, okay, here's the deal with Apple, and this is why this matters so significantly. Apple moves the entire indexes. Apple moves the entire semiconductor space. If people feel like, hey, iPhones are selling well, or, you know, let's just call it their products in general, all semiconductors kind of go up, right? It even moves stocks like Nvidia and AMD that don't always, you know, make a lot of their direct revenue from Apple, but it even moves those sorts of stocks as well. It moves almost everything hardware and electronics related. Apple is the most important stock for the entire stock market, and not by a little bit, but by a massive amount. The number 2 most important stock for the stock market is so far below Apple. And it's not just because of its weight and because of its market cap. It's because it moves all these other sectors of the stock market. So if Apple goes lower and lower and all of a sudden it's in the 120s, 110s, 100s, look for more devastation in the overall indexes as well, because it will bring down tons of other stocks. I mean, Apple's so wide ranging, it could even bring down dang oil and gas stocks for flip and flapjack. And I mean, this is, you know, that's just the way it is. I mean, the whole vibes of everything changes when Apple stock is falling, and this was the last one to hold the show up, and we're losing it now at this point in time. If we break 135, you know, all of a sudden people are going to be talking about we're going down to, you know, $100 to $110 range at that point in time, okay? And if you look what was the worst stock of big tech today. What was it? It was Apple. The worst stock of the whole bunch now at this point in time, which goes to show you that, you know, we're in the final stage of the crash. And in the final stage of the crash, you see stocks like this, the ones that had been the last ones to hold up, fall. Okay, they come for everybody by the end of it. They come for everybody. And it doesn't matter what stock you have, doesn't matter what you're doing, what your business model is. By the end of a real crash, everything's gotten hit. Everything's gotten obliterated. It doesn't matter what your business does. By the end of it, that's just the way it is. In normal market conditions, you know, everything can fluctuate. This stock might get hit, but this stock over here doesn't get hit. In a real crash, Look, go just, pull up a history book for a moment. Look at 08, 09 and just start typing in stocks. And what you will find by the end of that crash, every stock had been hit. It just moved through waves. Some stocks started getting hit in 07. Some stocks started getting hit in 08 big time, right? And then, obviously the market bottomed in early 09. And by the end of that thing, didn't matter what it was, whether it was Apple or whether it was Walmart or whether it was Procter & Gamble or whether it was Cabela's, it didn't matter what the heck the stock was. By the end of that thing, all of them had been trashed. That's the sort of crash we're in right now, okay? That's the sort of thing. You're not getting out of this without getting hit and getting hit hard, okay? This is scary. The NASDAQ just broke a new low, okay? Is now down over 33% year to date. Year to date, okay? 10 months into the year, about to go 10 months into the year, and down 33.2%. Now, you might say, why is this so scary? The reason this is so scary and why this matters in such a significant way that it closed at a new low is you got to understand so many folks on Wall Street look at technicals, okay? And when you see an index break through a new low, people freak out. And especially when it closes on that new low, people freak out and they're like, okay, man, because then people look at it and they're like, it's no bottom in sight now at this point in time, right? You could go down another 5-10%, like that. And that's the way technical people look at it, and technical traders, and especially in a market that you have no real fundamentals to go off of right now, right? CPI is still not coming out for another couple weeks. Earnings aren't coming out for a couple weeks. So right now you don't really have much to go off of fundamentals. PCE came out. People didn't like that, right? And so you have no real fundamentals for the next 2 weeks, and you've got a NASDAQ that's just closed on the lows. So now people are looking at it like, anybody's best guess where this thing's bottoming out now. That's why this is so scary for the market, because you can't judge on fundamentals. And so many people look at the technical data on Wall Street and they say, wow, where's the bottom now at this point? And then you got to start looking at, ranges the NASDAQ was years ago, or potentially, back in Rona, something like that, right? And that's what people start looking at. Or they start looking at pre-Rona highs, which for pre-Rona highs for the NASDAQ was like 9,700, 9,800. So that's what people are going to start talking about now. They're going to say NASDAQ's going down to 97, 9,800. And for the psychological reason of the stock market, this is something the market kind of wants to see. The market wants to see all gains from Rona wiped out. And we've seen that in countless stocks where they've wiped out literally all the gains the stocks made in Rona. Literally. Like, it's crazy, right? And I feel like from a psychological level, the stock market kind of wants to see all the index gains wiped out from Rona and go back to where we were before Rona happened. And when you start to look at the way things are playing out, it's like, we might end up there, to be quite honest, okay? Now, this is even scarier. The S&P 500 just closed at a new big low, okay? NASDAQ was at least close. This is a new big low for the S&P 500 now. Now the S&P 500 is down over 25% year to date now at this point in time, okay? And so, when you're in the final stage of the crash, which we're in the final stage right now, and like I said, this lasts anywhere from 3 to 6 months. We've been in it for about a month and a half now, so that's the good news. Where it'll be over sooner rather than later, but we're still going through it, so do keep that in mind. But when it comes to this, there was a lot of people that got very cocky and, looked at it and like, oh, you guys playing around in those individual stocks. Look at my indexes. They're holding up so well. Look at the Qs. Look at the S&P 500. Okay. It just shows me, one, not humility in that situation, right? But two, not a study of past crashes. Remember the great financial crisis, by the end of it, and this probably won't be as nasty as that, but by the end of the great financial crisis, every single index fell over 50%. I think a lot of folks weren't in the market back then or didn't study that time period to understand that, because by the end of that, oil and gas stocks had been obliterated by the end of that crash. Everything had been obliterated. And so you got to understand, don't get too confident and cocky about, my thing's doing better than your thing and things like that. It's, by the end of the thing, everybody's going to get it. You do understand that, right? It's just a matter of time. It's a process that takes time to build out. I played tackle football for 5 years, okay? And, I was never one of those that if I got a good hit on somebody, like, talk trash or anything like that. Because I understood, it could very easily be my time next, right? And, to put other people down because, this happened, that happened. It just doesn't make sense. By the way, I was 6'1" back then. I didn't stop growing till college, okay? I'm 6'3" today, if anybody's curious about that, okay? But this is where, all this, oh, my thing's doing better than your thing, something like that. It's like, man, by the end of this thing, you got to understand, if we're in a real crash, indexes are going to get hit a lot harder, and especially if Apple stock continues to get damaged, right? And there's no point in rubbing in people's face, right? And, if you have watched me over the years, right? And you watch what I went through with Tesla, and obviously that stock changed my life, right? And, I call this house the house that Tesla built, because it literally changed my financial future and took me from a place where I was doing good for myself to, a place where I was like, became the 1%, right? That stock completely changed my life, and I'm super thankful for that, right? And I've never, even though I used to get attacked by the short sellers all the time and called so many names from the people that were obviously bearish on Tesla stock and things like that, you never saw me like, oh, you bears, you're so stupid. Aha, look at all the money you lost. Look at how much. Because what does that do? That doesn't accomplish anything. All it does is show like you have maybe potentially ego problems, to be quite honest. And there's no fun in that. Like, I understand that could have went south for me. They could have went south for me. Like, Tesla could have maybe potentially went bankrupt, right? And I could have lost all my investment in that. And instead of it being a life-changing stock, it could have been a disaster stock for me. And especially for how how much of my brand I created around Tesla stock back in the day, right? And so I'm very understanding of that. And a lot of people just aren't. And it just shows like not study of what can go on here, or just potentially like ego problems or something like that. And that's why, like, when your thing's doing good, don't put other people down and say, your thing's so bad, because I'm just telling you, like, I've been in this game for 14 years. Everybody gets it. I don't care who you are. You're going to get it, man. And it's part of the process of this game, right? It's part of the process. If I look at stocks that I own, right? All these stocks I circle, I'm down over 50% on right now on cost basis. Chef, Oatly, Honest, Avant. All those I'm down 50% on cost basis right now. Maybe those don't work out. It's a possibility. It's a possibility they go bankrupt or they don't work out or something like that, right? Probably a little unrealistic for especially these two, but you never know. And this one, to be honest, as well, right? But you never know. And so, we'll see what plays out. Those companies have to have their margins get exponentially better over the years, and cash flows and net income. And if they do that, it'll be massive winners for me. If they don't do that for me, then I'm going to have lost hundreds of thousands of dollars in those stocks, right? Well, not Avant, because I haven't put that much in it. But in these three, I put hundreds of thousands of dollars. In this one, it's over $1 million. I'm very understanding that might not work out, right? It's a possibility. And it's also a possibility that they work out massively and I, 5x, 10x, 20x my money or something like that over the coming years, right? But I'm very understanding of that risk I'm taking. And whatever happens there, I'll treat it humbly and it will be what it is. Whether it's, ends up being massive losses over the next few years or whether it ends up being life-changing gains. Like, it is what it is. Now, when it comes to JP Morgan, here's the deal. This stock looks like it's going to end up going down on a 5-year basis now at this point in time. And this shows you the reason this is important, and what this shows you here right in front of you right now, is this shows you how much Wall Street is scared about Wall Street. JP Morgan is Wall Street. Let's be very clear about that. It's the most important bank in the world, period. And so JP Morgan is Wall Street, and Wall Street's concerned about Wall Street. They're concerned about credit risk. They're concerned about EPS over the next couple of years, especially if loan activity is very low. The IPO environment is non-existent right now. And there will be, the IPO market's going to be dead for at least 6 months, if not a year. Because here's what happens. When the market finally turns around, which that's a debate if it's a month from now, 3 months from now, 6 months from now, whatever, okay? When the market finally turns, it's going to take a full 6 months after that until people start going through with IPOs again. So for JP Morgan, their IPO market's dead right now. There's obviously worries about credit risk, right? Then on top of that, you have a situation where, who's taking out loans right now? And obviously JP Morgan plays in the loan space. When you add up all those things, it's not an ideal climate or even remotely close to it. It's actually a really bad, horrible environment for a stock like JP Morgan. And the stock can't find a bottom. It's new low after new low. You could have thought, man, 140 is a good spot to get in JP Morgan here, man. And then it goes to 130 and it's like, now it's a good spot. And 120 and then it's like, now it's a good spot. It's 104. On a long-term basis, it's probably a really good spot, actually, to be buying. But, who's to say that one doesn't go to 90 or 80? In this market, Wall Street won't buy a thing right now. All they're doing is just continue to put selling pressure day after day, month after month, and week after week. That's just what's going on, right? The safety stocks, there's another bunch that had been holding up good. Not anymore. These stocks are starting to get hit. Look at a stock like Clorox here today, down 3.5% on a 1.5% move for the S&P 500. Obviously, we spoke about Apple, right? Target's getting hit. Kroger's getting hit. Pepsi's getting hit. Microsoft continues to hit new 52-week low after new 52-week low. And honestly, multi-year low as well. And it's where's the bottom for that one? Walmart's getting hit. Procter & Gamble. By the end of it, everything gets hit. Carnival Cruise Line fell over 23% today. You got to be flipping my flapjacks. That stock is back to $7 for Carnival Cruise. Now, actually a friend did text me about Carnival Cruise Line today, and I was, telling him, hey, the thing with Carnival, things have deteriorated so massively from where that company used to be. I used to own Carnival prior to Rona. And then once Rona happened, that changed everything for that stock. And I was like, I'm done with that whole situation because, they were basically because of Rona. It's not the management's fault. It's not the company's fault. But because of Rona, it put the company in a situation where they had to shut down their entire business for basically almost 2 years, right? And they had to take massive amounts of debt. Well, now there's this crazy levels of debt on this company, right? It's a mess situation for Carnival. And, this is a company that if there's recession fears on top of massive debt, then there becomes bankruptcy fears again, right? And so, unfortunately, Carnival's unownable, although it's a good company. It's been well run. And unfortunately, they just got stuck in a situation where the government shut down the world and basically shut down their business for 2 years. And if you're going to shut down a business for 2 years, good luck surviving that. And usually the only way you're going to be able to survive that is if you take out massive amounts of debt. And now this is, just a crazy debt-ridden company that is in a really, really tough spot for when it comes to Carnival. And so it's a mess for a while. And the problem with a Carnival, it's not like the banks in the great financial crisis, right? Where, the Fed backstopped them, the government backstopped them once they let a few fall, right? Carnival, like if that went bankrupt, no one's coming to save Carnival, especially not in the United States. They're not even technically a United States corporation. Why would they come save? Why would any government come save a Carnival? There's no government that's big enough that would come save Carnival. These cruise companies have kind of skirted taxes for a long time. You think anybody's coming to save the day? They'll let that one drown? Is that a good word for it? I don't know. Okay. Rocket hits a new low after new low. It continues to rocket down. 632 close here today. What does it have to look forward to? If I pull up the latest, investor report that we have inside the private group, by the way, if you're looking to join us in the private stock group, check out the pinned comment down there to get access to our Discord chat where you can chat with myself and all the other shareholders of tons of different companies, get access to our private group investor report that goes over a ton of helpful information and access to all the course curriculum and things like that. If you want access to that, check out the pinned comment to apply. But, this is obviously the real estate section, and mortgage rates just continue to go out of control. I mean, at many points this week we were 7% plus on mortgage rates. When does this situation get better? Not in the short term. The thing is, even when mortgage rates come down, they're still so high compared to where they've been over the last several years that people aren't going to run out right away and be like, I got to go buy a house now. It's going to take a while. It's going to take 6, 12, maybe even 18 months for that whole situation to play out. It's not fixing itself tomorrow. That's all I'm going to say about that when it comes to the 30-year. And, my main concern going into this year, 2022, my main concern was the middle class, right? And the middle class has obviously been sliced and diced this year. It's been awful. My main concern for 2023 is real estate. I want to be very clear about that. If I just think new home orders are going to dry up massively. I think there's going to be a lot of layoffs in the real estate sector. Realtors, I don't think they're going to make much money over the next year. And I apologize for all the if there's any real estate agents that are watching this or brokers and whatnot. It's going to be a horrible environment for the next 6 to 12 months. And I think everybody in the real estate industry understands that now at this point in time. I think at first At first, it was kind of like a stage of denial, like, no, this can't be happening. Now I think even people that are real estate professionals are starting to come to grips with the fact that it's going to be a horrible operating environment for at least the next 6 months, if not 12 to 18 months. And so I hope for all the agents and the brokers and folks that were making bank, the last 2 years, I hope they stuffed a good amount of money away. Because if they were out there blowing it all, man, I'm just going to tell you, there's not going to be a whole lot of money to be made for the next year or two in that particular industry. Other industries, will be just fine, but that one's going to be tough for a bit here, okay? Now, commodities. If you want some good news, commodities continue to go down. That's one piece of good news. This is obviously going to help companies' margins down the road, and especially as commodities go lower, this will help immensely, okay? Especially small cap stocks. This matters in a meaningful way, okay? You look at a company like I own, like the Chef, right? Where they ship across the ocean cauliflower from Italy, right? And, it's completely wrecked the company's margins. Everything that's gone on in inflation, in trucking rates, ocean rates, everything wrecked that company's margins and just made it look like they can't even make any money, right? It's impossible. Well, all that's coming to an end. Thank goodness, okay? Obviously, commodities have been tanking down, okay? Look at something like oats, which obviously affects Oatly in a massive way. Oats have crashed like insane over the last 3 to 6 months, and you'll see that in Oatly's numbers, and then you'll watch their margins improve over the next few quarters. This matters in a significant way. Ocean shipping rates have plunged 60% this year, and it hasn't ended. This was back from September 5th. Ocean rates continue to go down. They're going to continue to go down, and if the economy continues to weaken more, guess what? These rates will continue to tank down, which is phenomenal news if you're a company that has to transport physical products overseas. This is good news for your margins. You're going to be in a lot better situation. Let's just call it that, okay? Now, to Nike. Nike obviously was attention today. It was down 12.8%, which is a huge move down for a stable stock like a Nike. Lost massive amounts of market cap, over $10 billion in market cap here today. Stock's now down roughly 50% year to date, which that's an unthinkable number for a company like Nike. Really, 50% for a company like Nike, that's unthinkable, man. To even process that, like Nike down 50% year to date. Here's the deal, okay? Nike reported 4% revenues up, 22% EPS down. It's awful, man. And, Nike's raked in a lot of money over the past few years, and now that's all just being, in terms of the way Wall Street looks at it, they don't even value that right now. I don't think it's the right thing. I think Nike's going to be a moneymaker over the coming years, and I know how phenomenal that brand is. But at the same time, here's the problem with this market. Because you have so many stocks crashing, I'm as bad as I want to buy Nike. I don't know if I probably won't buy Nike. And not because I don't think the stock's a good deal, not because I don't believe in the company. It's just for the fact that there's so many good deals in the market. And this is a problem in a crashing market. Everything is crashing. So you got all these stocks, and it's a new stock every day, and it's quality names like even a Nike, right? NVIDIA's, the AMD's, Meta's, these stocks are down 50, 60 plus %, right? Quality names, some of the famous companies. Look at Adobe. I mean, look at these stocks. But it's like, gosh, do I want to go risk reward there? What about this other stock over here? If I put money in a Nike, then I didn't put that money in Meta, right? Well, what has a better ROI over the next, let's call it 5 years, Meta or Nike? This is the way you kind of got to look at this stuff, right? And so that's the tough thing for me. And I think anybody that's a buyer in this market right now is trying to figure out, where should I be focusing my capital right now, right? And you've got to focus it on the 10 to 15 stocks that you like the best for the next 5 years. And sometimes you're going to find a lot of stocks in this market that you're like, gosh, man, I'd really like to own that. But there's just better opportunities. And that's the hardest thing with this market, is being able to see all these stocks devastated and knowing that's a moneymaker over the next few years, but I'm not going to buy it because there's other better opportunities, man. That's a tough dealio, okay? So, in this final stage, everything's just going to continue to get wrecked, and you got to be a buyer out there, man. You got to take advantage of this over the next few months. because I can tell you these situations don't happen all too often, and that's kind of that whole situation. Okay, this is a video I'm most proud of that I've done the entire year of 2022. It came out 8 days ago, called This Is Chess, and I got 16 queens. If you did not watch that video, watch it. If you didn't watch it all the way through, watch it all the way through. If you already watched it, watch it again. Okay, that's a video I'm most proud of. Unfortunately, it didn't get the most views, and I understand because it's kind of a strange title there, but I promise you to me that was the best video I've done this entire year, and I would love everybody to take time to watch that if you haven't already watched that. I appreciate everybody for joining me as always. Thank you for everybody that subscribed to the channel. I appreciate you all. Thank you so much. Yeah, we'll chat again soon. Okay, if you're looking to join us in the private stock group, pin comment down there. Much love as always, and have a great day.